It's that season again when high rollers in the City of London line up for their annual windfall of cash. In past years, it's been a time for celebration, but 2009 looks set to be the winter of discontent.
Clearly, you've seen this year collectively banks, financial institutions announcing huge losses. Well, clearly bonuses, which make up the bulk of compensation, are down significantly this year.
This comes at a chilling time for Europe's financial capital. It could be one of the worst bonus seasons since the dot-com collapse. As investment banks try to weather the recession, thousands of city workers are expecting an icy drop in payments. Some are even calling it the year of the donut, meaning a zero bonus. Yet any extra payments to city workers are likely to cause friction with the general public as the UK recession kicks in.
I think this is an emotive time. There's a lot of speculation and not enough fact when it comes to dealing with this issue. There is a perception that people on the whole have been consistently overpaid, and that's not the case. I think what's happened is it's been the few who have behaved badly and been overpaid who brought a scrutiny to financial services.
Late last year, the UK's Financial Services Authority got involved for this very reason, writing a letter to CEOs at investment banks highlighting their fears.
There is widespread concern that inappropriate remuneration schemes in the areas of investment banking and trading have contributed to the present market crisis.
Once frosty to reform, institutions are now scrambling to revamp pay structures.
The FSA's Dear CEO letter was really their opening salvo to financial services about get your house in order. And what we're seeing already from a number of houses is they have.
UBS and Morgan Stanley are taking the lead, with clawbacks on bonuses if deals turn sour. They're also deferring payments so that bankers think more in the long term.
There is clearly a huge amount of political pressure on both sides of the Atlantic to make changes to the bonus culture. But let's not forget this is performance-related pay. And so people who perform well do need to get rewarded well.
In New York, $18.4 billion in bonuses were paid out this year, despite the downturn. In response, President Obama is looking to cap wages at firms that are now receiving US government aid.
There is an overhype creating a link between bonuses in the city and the downturn stroke recession. It is inevitable that in times of want, people will look at those who have. And I think that's what's driving this. I also think that this is an unfortunate populist measure that the government is focusing on because it's easy to explain.
Yet the city now expects a slippery ride. Fearing new regulation and political pressure from the UK authorities, the question is whether this could freeze up London as a financial hub. And fears are mounting that other global banking centres could be eyeing disenchanted workers.
Clearly there's going to be more regulation, that's going to need to come in. I'm hopeful that that won't be overly oppressive because if it is, it will tend to drive away talent, it will tend to drive away institutions, and that will be severely damaging to London.
The entitlement culture that mushroomed in the bull market years is thawing. Bonus expectations are already lower. The city is more sensitive to public outrage at big payouts, and global recession, by its very nature, is ushering in a new era.
I think the greatest impact and the biggest hook, if you like, on which to hang potential change for the next few years is the fact that bonuses will undoubtedly be a great deal less this year. There'll be a degree of self-regulation simply by the fact that there isn't enough money around.
This year, a diet of donuts or zero bonuses may just save the banks from their own excesses. Yet the UK public's icy attitude towards the city is not likely to move to sunnier times, as long as the short-term bonus culture is still seen to fuel business.